have some new members that have joined, and then also if you want to kind of go over this again, season or not, sometimes it's helpful. And for you to kind of listen to other people's strategies and what we're looking at, and just to go over this with some companies. So if you have not already, everyone should have gotten this note, this tape. This is the performing note tape that was sent out. This one is exclusive to us. So a little bit of history about this tape. This one was a carve out of a larger trade that some of my friends are doing. And so I think it's somewhere between a 30 or $20 million trade. And so they carved out some of the lower balance ones for us. We call this the tail of the tape because this is what we love to buy. So what you're going to see here is I've done some of the homework to some extent. I'm starting to go through this tape myself. If you're coming to this masterclass, if you're planning on coming to it, I really encourage you to. We are going to be doing a whole 45 minutes on how to use ChatGPT to analyze these tapes and find the best spreads for you and do all that hard math for you, right? So best thing in the world is I've been geeking out on this ChatGPT and it's been amazing, right? So this is going to level the playing field for people to get involved. If you think, oh, I don't like spreadsheets, or it's hard for me to do, my ADHD won't let me spend that much time on a spreadsheet. Been there, done that, but the t-shirt and the hat. It's like, hey, let's figure out how we can still get involved, right? So, yeah, I'm going to be working alongside of an AI expert who's going to talk to you about in the masterclass how to integrate AI to make sure you have a very self-sustainable business that you can run with ease. It's the whole point of note investing. Note investing is like this. For all of you who are familiar, if you want to become a lawyer or a doctor, right? You're thinking to yourself, this is great. I'm going to be a doctor. I'm going to go to law school. I'm going to go to medical school and I'm learning how to fix people, right? And or work with people. But then no one tells you that you also have to run a business. And so that's one of the things I'll tell you. If you talk to doctors or lawyers, they may not be the best business people because they spend all their time. But then lo and behold, if they want to run their own practice, they got another business piece. So same thing with the notes, right? You want to make sure you understand what you're doing. So ChatGPT is here to help. In the meantime, I'm still going through the old school, the way I'm training people who sign up because one, I think it's very important that you learn how to do it on your own. And two, I like to check right now. I'm still in a phase where I don't trust ChatGPT, even though it's coming out very accurate. I don't trust it as much as I should. So I'm going through it myself and being pleasantly surprised. So let's talk about some of the amazing things about this tape. One, as mentioned, someone let me know. Can you guys see this screen? Or I keep talking to myself.
Yeah, I see it, yes.
All right, perfect, Josh. All right. Josh, longtime member. I think it's since 2020. I was looking at your file the other day. So amazing stuff. If you want to talk to him about doing partials, here's what's good about this tape. Some of them might even be right for it because what the second thing I'm going to show you might really highlight that some of these as partials. But with that said, we've got lower balances here. So lower balances mean that these will be very affordable based upon whatever discount we can procure. And so if you have a $27,000 loan, depending on what, it looks like, et cetera, you will be paying somewhere off of what's in this column, guys. And so beautiful thing about this, I've seen notes as far as 4,500. So again, you would not be paying that 4,500. It'd be based upon how many months are left, what the payment is, if it's even worth it and what you could offer and what you would receive for it. But anyway, yeah, notes, like I said, as low as 4,000. Got one here I grayed out some of the ones that only have $900 left. Obviously, we don't want anything to do with those because, basically going to have to hand a deed over. But all the way to 179,000, right? So pretty, if you talk to me about note investing, I tell you need between 30 and 40,000 because the average note you're going to buy, you're going to pay somewhere between 50 and 30,000, right? So this is kind of what that tape will look like. Now, these are all supposed to be performing. I have not verified and seen all the pay history. I'm still waiting for that. I did request certain additional information, like I requested the next pay date, right? I noticed that was missing. For those of you who have it, I noticed that the next pay date was missing and a few other items. So I have asked for these things. I'm waiting for them to get back. So first thing I'm going to highlight is that we've got some very affordable, dare I say, loan balances with us, if that makes sense. So we should all be able to find something here that fits our appetite and our risk level. The second thing I see is this note rate. This is the coupon rate, right? And so these are pretty healthy. Looks like the lowest I see is like a 7. So again, based on a discount we can procure, you should be able to get double digits on this, right? On your money. Some decent down payments. So we made down payments. The other thing I want to highlight here is the payment amount. So these are the monthly amounts that you can get from each of these notes. And so again, majority of them are pretty handsome. I'm seeing some up there to $6,000, $7,000 a month. So you really want to start breaking in on that math and finding out what type of IRR you have based on what time is left, right? Any type of expenses you want. I've allocated $40 a month for the servicer, right, for performing note. But for the most part, some of these offer some very healthy monthly payments, right? Talking $900, you can split that with someone, you can partial that off. $400 payments, even healthy, depending on what you have to pay for it, right? And so, where's that one? Just for the heck of it. So this one was about 42 on the unpaid balance. So we figure out what we can offer on that to make this, a nice note. But look at it, it's already at a 10%. So, any discounts just going to take it north of there. So we're looking pretty good on these things, even for after expenses and probably, let's say, the value of the home, right? So let's check this out. Let's jump into what makes this attractive to people like you and I. Obviously, it's the IRR. I'm sorry, the ROIs. This is something we calculate real quickly. These are all over the place. I'm in the process of just verifying all these manually, but this is kind of what I've come up with. And some of them I'm adjusting for what I think we can offer for these, right? So I'm putting together offers that I think are going to be reasonable. Have not negotiated the acquisition price yet. So I'm assuming I can get at least 15% off on this. So maybe around 85 cents on the dollar. We'll see what we can do. But based on the 85 cents on the dollar and how much payments they have remaining, which we'll get to here in a second, that's kind of where we calculated in the annual payment, how we calculated this basic ROI calculation to give us some rough figures. If we can get it lower, then, kudos. But some of these, again, these are pretty handsome considering what our options are out there and the risk that we're having. So let's look at that for a second. These are potential offers. So some of the yellow columns, just so you know, that's the stuff that I just started calculating on my own, so I can just kind of put this tape together and see what the real value of it is and not get so odd about it. So remaining payments, for example, right? They told me how many payments were made. I went to the terms and I basically did some math on this. We'll verify everything once we get the collateral, right? So just know that. We're going to take the word from the seller, and then we'll go in and verify everything with the collateral. So the other thing I'd like to highlight is that our remaining terms on these are going everywhere from I've seen some, like I said, from 3 years remaining. I calculated 2 years so it'll be easier on the eyes, but all the way to 28 years. So how long do you want your money held? Fun fact, people, if I buy a mortgage, I have to hold it for 30 years. First of all, the answer is no. Not many people, hold a mortgage for 30 years. Think about in America, right? When you have a mortgage, most people refi every 4 to 5 years. So there's one exit strategy. 2, you got to think about the fact that is most people's strategy, especially if you buy the longer term ones for 30 years, is to hold it for the first 5 or 10 years and then resell it, because you're going to get a lot of your principal back, because again, there's so much money to be made on that bone, right? So much more meat on that bone. So you can still collect 10 years of payment and at the same time go and sell it for dang near what you paid for it, right? So that's where that high kind of return ultimately comes in on the sale. So let's talk about, and I want you to stop me if you have any questions, because I'm gonna dig in here. We're gonna pick one to look at, but let's talk about if you have a question, raise your hand and I'll have Tiffany look out and then she'll stop me. Let's talk about locations of these. So we're in Texas and Oklahoma. These are some of our favorite states. A lot of you guys know why. You can assume why if you have a question, to ask me, but we've invested in these states for a long time. For those of you that are aware, we just took down about 300 acres, 160 plus loans in the state of Oklahoma. So when I tell you we're hot on Oklahoma, we love Oklahoma for a lot of reasons, especially coming up in this recession-prone economic environment that we're coming up on. These are pretty stable places, okay, to invest in, especially in the mortgage markets place. So anybody have any questions? Well, I'll pull one of these up just so we can see what these are collateralized by. Let's see, let's look at something that might be affordable. Somebody tell me which one they want me to look at. Let me look by unpaid balance, something 30,000 or lower, 100,000. How about this one? What do you guys think?
I did a snapshot of the 3 smaller notes in Texas with like at a glance number.
Let's look at that then. Which ones were those? I love that. Let's look at what you did.
Yeah. this is just at a glance. I just did it yesterday. Let me just
And they were based on the lowest, what?
just the three that's about 15,000. So they're about 45,000 total for the three notes, just the lower end one.
So I don't like these 12,000 ones, like which ones? You remember which ones they were? Give me the addresses. I guess that's the best way to look at it.
Oh, I was trying to present and then I'll show you.
Yeah, you can do that. That's better. You want to share your screen? I
Yeah.
appreciate it. Go ahead.
Can you see it?
Thank you.
Can you see my screen?
Yes, ma'am. Sorry, I didn't know I was on mute. Yes.
Okay, got it. So here's the I highlighted over here. These are the three notes from Texas, Fort Worth, and Dallas. So the unpaid balance, you've got 13,000, 14,000, and 14,000. This was the original purchase price. The note rate is pretty good, 11, 9.5, and 9. The loan amount was 66, 44, and 53. So annual, I did annual payment. So for these three notes, annual payment for this is 7,500, 5,500, and 5,200. So out of those, the shoot, where'd it go? Here's my number. Oh, right here.
We see. Oh, there it goes. Yeah. And I'm going to
Yeah.
pull those up on the screen so we can have them. But go ahead.
So here it is. The total unpaid balance is, can you see my screen, right? It's
Mhm.
44,642. Your total annual income is 18,276. So that's 40% ROI in the first year. Cash on cash return is 2.4 years to get your principal back. And then you have another 10 years for the Dallas note, which is right here. And then you have another 3 years on the Fort Worth note, and then 10-year on the other Fort Worth, Texas note. So, right here, Fort Worth, Andover Street, you have another 11 years, and then Dallas is another 10 years. Let me just look. Dallas is, you have payment made. Yeah, another 120 payment. So another 10 years on that.
So that's awesome.
Yeah.
I walked in the office and Tiffany was like, I'm calling my cousin right now. We got to get this money. Right. So you have to think of the strategy. She just laddered like 3 different notes that are in a range that she may have someone or herself be comfortable with spending and looking for a decent return. Right. And so I actually highlighted the notes, and funny is that one of them I highlighted too in my own research, saying, oh, that's a hot one. So
There you go.
yeah, right. So, and this one here, Andover Street, let's pull this up. This one came in my opinion, at a value of about 240,000. So when you talk about your equity on this, if this guy stops making payments, you're covered by this home here, which I'm going to pull up here, or but a home that's valued somewhere north of 200,000 after repair, right? And so whether or not, and this is actually a decent one to show you, because let's look at it. Whether or not you guys want to move into this, that's why I invest in notes, because nobody wants this guy's house, and he doesn't want, he wants it, as a matter of fact. Ask me how I know, okay? Because, look the way, this is pretty well kept yard, right? This is a person who's comfortable. He's got equity in his house. He's not here for us to foreclose on him over our little, what are we going to pick up on this one? Let's go back to the screen. What do we pay for this one? UPB. So, loan amount 13,000. He only has 13,000 left on it. So that's the reason I highlight that one, because he's got 13,000. I think I can get this one discounted from that, right? So call it 10, call it 8 as I'm going to go in for, but wherever we land, this brings in an annual amount of $7,000 a year with that 629 on the P&I, which I'll confirm that that's P&I. We have still have questions, but technically, it's got 11 years left on this thing. So when you talk about returns, that thing is, I have the money right now. It's an ATM. Like, who do you take, credit or debit with this thing, right?
Mhm.
And so you have to start looking at these and doing the math on it. So anybody see or have questions about that one, or can I get an amen from anyone that they think that that's a decent one as well?
Amen.
Let's see what we're
sister.
looking here. Everyone else have questions about this one? All right, EJ sees the price on that one. So this one, we should be able to get for under 13,000. Has 11 years left on that bad boy. That's pretty amazing. And the house that's back why we just saw it. Another one she picked here was this one.
Yes, Fort Worth. Yeah, because he lives in San Antonio, so I picked Texas.
Okay. So the person that she was working with. And so while I'm pulling this up, I'll be straight up with you guys, right? We have an investor, a member of ours who called us, and Tiffany vouched for this and said, hey, how much could I, how much for the whole tape? I can retire off of this. Right?
Yeah. He's actually, trying to get the, financing for it.
Yeah, he's trying to figure out how to get this a loan for this, right? Because think about this. This is a $3.1 million UPB. This is the inventory, by the way, that backs that loan up, right? That we were just looking at.
Mm-hmm.
3.1 million in UPB. I think it's cash flowing like $500,000 or more, 536,000 a year, right? Like, come on, how much do you need to retire on that? And Lord knows what the I forgot what the I don't think I know what the WAM is, the weighted average maturity on this thing, but I'm waiting for that information. Or maybe I just haven't calculated. I don't know if you know, Tiffany. But with that said, assuming that it's a decent amount of time on it, because we saw some out stretching 30 years. That's $500,000 worth of income. He's like, I just want to retire from my job and just work this portfolio, right?
Mm-hmm.
And so he's thinking he's going to the bank to see if he can get a loan. But if he can get, a loan for about 2.5, I'm not sure what we'll be able to negotiate, but this is what he had in mind. And this is one of the reasons people get into note investing. Okay. So I want to make sure that we can talk about other people's strategies and, what they see when they see this tape, right? This is a guy who's been investing in notes for quite some time. And so that one we just saw, this one on Lester, we would get that one for another 14,000. It's an unpaid balance, as she mentioned, right? Note rate's about 9.5. And our offer would be closer in the 7,000 somewhere I'll try to get, right? So total, if we get our way with all this, right? And a lot of times I'm going to discount it lower because of how much time we have left. The principal, there might be something, but I'm always going to try to find a reason that we can get it lower, right? But if we can get this thing anywhere from between 27 and that 45,000, we're going to be in the money. And that's what my job is here to go. Hey, if I can shoot for the stars, this is probably what I can get away with. And then we land with it. So let me know if you guys have any questions. I'm going to skip to the next tape. Anything else you want to see on here?
Hey, Jasmine, I had a question.
Mhm.
What you were just showing, the last screen, right? You had that green highlighted one. It said it was 13,000 UPB and it was $629 a month was the payment.
Yeah.
Mhm.
Right?
Yeah.
Yes.
What's the term left on it?
It looked like it had 11 years last I looked, but let's put
11.25, Dennis.
Because it's $29 a month. That would be fully paid off in less than 2 years.
But it's amortized, obviously. They're not going to be, it's not all going to go to the principal. They have 11 years left, right?
I put it in my calculator. It says 22.78 months.
Yeah, we'll have to see. Even at the current rate, at the 11, what's the rate? What rate did you? Yeah.
11.
I tell you what, it's highlighted. We're going to verify all the details, right? So we have to see what's actually going on here, right? Maybe this is taxes and insurances in here, so this is not P&I only, right? That's my first thing that I'm suspect is that I think some of these might not have. This might include taxes and insurance, right?
Okay.
So we'll dig into this tape a little further. But I don't know what I can really find that would blow this out of my water for me because it's already looking pretty nice. So again, if we drop this, who knows? But I'm going to, with trust but verify what he sent us. This was an incomplete tape as far as I was concerned, but it was enough to get us started and see what we have in mind, right?
Yeah, it definitely looks good. I was just questioning like some of the terms that the remaining terms, that whole column, and there was some negative numbers too. So I just wanted to follow up with you on that.
Yeah, I saw some of those too, as you see. So I even had to highlight them in gray. But this is what we're doing, ladies and gentlemen. If you're a spreadsheet geek and you're ready to get into this, or even if you're not, nowadays you can go to ChatGPT. Not all of the ChatGPTs can actually dig into tapes like this, I found. So during the class, I'll recommend 2 or 3 of them that I know are really good at financial sheets. You can I literally just drag this into a ChatGPT and it told it to calculate this, that, and the other. Matter of fact, I should show you what I found if I can soon. Maybe Tiffany has it. I'll skip to the next tape unless there's any other questions on this one and what you can do with it and how we're looking at this, right? We assume everything here is correct. They told me it was performing. We're going to get the pay histories and everything confirmed. Once we do, we're able to plug in all the missing numbers, adjust all these ROIs and our risk levels, and move forward, right? I have a feeling some of these might be semi-performing and non-performing, which may make it a little bit better, especially with equity in these, right? So, all right, if there's no questions, then let's get to the non-performing note that we have. Can you guys see the screen?
Yeah, I could see it.
Yep.
Perfect. Sounds like that was EJ. He loves this non-performing note stuff. So let's talk about what we have here, ladies and gentlemen. So this is the latest non-performing note tape. So unlike the other one, well, I say much like the other one, I got a few calls of people who want to take this one down by itself. So the person looking at the performing note still has to look for loans and stuff and procure it, and it might be the largest tape he's taken down on his own, but he's determined to take it down by himself. But the person looking at this one will probably be able to close on it. So we'll see. I'll keep us posted, but this is what we've got in the mix right now. And so you can start seeing that this one's going to be something that's going to be a little unique for us because there's not many of us that are ready to go into the New York, right? So I'm going to go ahead and just filter this. Let's filter it for New York and get some New Yorks out of there. But if you do know anyone who's looking at New York, we got Brooklyn, we got Staten Island, we got East, Spring Valley, East Elmhurst. We've got it all here for you. Even the BX right here of Prospect Avenue, which is around where I was from. So this is good stuff. You've got modular homes, SFRs, condominiums, a 2 to 4 family, a manufactured home. So a little bit of a mixture, but again, mostly what our community likes, right? So let's go ahead and filter out so we can kind of narrow down. And this is how if you get a tape like this, sometimes we get tapes with, 500 assets on it. So you got to ask yourself, how am I going to, narrow this down? So states I like, right? Obviously I like California, but that's for the more seasoned big boys. So let's look at it anyway. But Alabama's pretty easy. I love Colorado. I'm sick away from Florida right now. Kentucky, I got a great lawyer there. It's not too bad. Let's check that out for the heck of it. Just got finished doing some stuff in Maryland. We'll look at that. We got a lot of people out there. Michigan's bomb. We'll talk about why and all this stuff in class. But there's a lot of stuff there. So North Carolina, we've got people out there. Shout out to the people in the chat that just spoke up. New York, we're going to avoid. Oregon, Pennsylvania. So Oregon's not bad, but just for the sake of conversation, we're just going to look at these. All right. So narrowing this down, the ones here at the gray, I think they're actually REO, meaning they've already foreclosed on them. So we would actually be looking at the actual land itself. Okay. That's not the land, the actual land and asset itself. That's what we would be bidding. Just as if we went to a realtor. Okay. So that's kind of how the negotiation process goes. Here, we're going to put our bids in based on this, right? This unpaid balance here. Ooh, estimated total debt. Nope, here it is. Unpaid balances here, which is it about the same? Nope. All right. So this might be the PO, the payoff, since it's a little larger, but and we prefer to try to price off this current balance. So if we're lucky, but again, depending on if we can take the whole thing down or not is going to depend on whether we can. What's that, a discount? And I know we don't have that type of New York appetite, right? So if I were to come in, I'd have to tell the guy, hey, we're interested in looking at these, right? So anybody have a particular state that they want us to check out since we're here? Out of the ones we have here, we can look at Colorado.
We could look at Michigan. That would be great.
All right, done deal. You know about East Point, my friend?
Yeah, absolutely, I do.
All right, of course he does. That's our community member, Eric. He's out in Michigan, firefighter. So I joke, does he know a neighborhood? Imagine asking a firefighter if he knows of a neighborhood. Yeah, I know them all, as a matter of
I
fact.
know them all.
All right, let's pull this up here. But a great resource and person that has done some successful JVs and has that experience if you guys are looking to do something. Eric, I trust you have your information in the chat. And here's what we got. I just pulled up the Zillow on this thing. So looks like a fairly decent neighborhood. We won't do too much 2D here. Plus we've got Eric if anyone's interested. But what do you know about the neighborhood since we do have you? Anything that you feel like sharing, Eric? Decent ranges, so 162. Maybe we'll price it around, 150 just for our conversation purposes, right? And so I'm not sure if Eric can talk or not, but based on what we have here,
Yeah, I'm here. Sorry
Uh,
about that.
no worries.
Yeah.
Just trying to fill the silence. What do you think you can share with us about the neighborhood at all?
East Point in general is all a good neighborhood for the most part. Before it was East Point, it was considered East Detroit, and then they separated and got established and got their own police department, fire department, etc. So it's East Point, and East Point is, like I said, it's on the outs. It is a suburb of Detroit, but it's a solid neighborhood. Very not very quiet, but kind of quiet.
All right, cool. So for the risk of sound, it may be decent because the current balance is only 9,000. So this is one of his specialties. But this one looks
Mhm.
like it's performing. I'm not sure how performing. So what I would do is look at the pay history because sometimes maybe they just started, they were delinquent for a while, then they just started performing last 2 months. That's why they're trying to sell it. They could just be trying to sell it because it's at the end, but it said this one was performing. So we'll assume that is and take it for face value and stick with it just for a minute and try to find a non-performer. But what I want to show you is that they valued it around 130. So I think that was pretty conservative based on what we see on Zillow. And so I wouldn't be too concerned about what the seller does. We're always going to verify because they usually tend to overstate it. So let's look at, since we're going to zone this in a little bit more, let's take off these performers. Thank you, Eric. And all right, now we've got non-performers. All right. So we've got California, Texas, North Carolina. Let's look at North Carolina since we got our people out there in North Carolina.
Hey, Des, I think you still got the Zillow page up.
Oh, thank you very much.
Mm-hmm.
Thank you.
Perfect. All right. So since we've got a few folks out there in North Carolina, let's go ahead and look at this North Carolina note. From what we can tell, they have, what is this? Looks like 15,000 of what they owe. Right. So based upon what we see, note sale pending to borrower. Not sure what that means. We'd have to figure it out. Note sale pending to borrower. So what I would suggest, or what I would read into that, I would say is that they may be looking to do a refinance or trying to like pay it off, maybe. But I'm not really comfortable with the way they phrase that, so I have to ask the seller because it says to borrower, right? So it sounds like they may be, and it makes sense, right? Because based on what they owe is only 15,000. So if I was subject to lose my house, then I would go into my IRA and get the money. But next due is 525. Last payment was 425. So this one doesn't seem to be too. It says RPL. So RPL stands for reperforming, right? So they were delinquent and then they caught themselves up, which is probably why they're looking to, refi or pay this off because they don't want to get in trouble with it. So that's how you kind of read between that. So perfect. All right, now let's look at, this is strictly NPLs that we have out of these areas that we like. So I always like Colorado. Although we just took down like a couple notes in Baltimore, so I should be checking that one out just for the sake of our community and stuff. But Colorado's always been good to me. They're pretty friendly when it comes to lenders, and the values are pretty decent out there, I think you'll find. And so let's go ahead and look into this one and see what we can pull up. I'm gonna share the Zillow tab on this one. We'll start from there.
Del Norte.
All right. So I see 14,000 on this one.
Interesting.
Yeah. Exactly, because it's probably not the value that might be the value of the note that we're buying, right? That's sometimes people come and mess with this. Zillow, you can put your own stuff in there. So ironically, first thing that I'm going to do is go back to the tape to say, where does that number come from? Is it familiar, right? And if we're looking at Colorado, they owe about 43,000. So it's not necessarily correlated there. But I would definitely look into it because I would assume that's not necessarily the value on it, right? So I'll go look elsewhere, but sometimes you can come down and look at the neighborhood. Let's see if it's got anything here. There you go. So this will give you a better idea of what's going on in the neighborhood, right?
Hey, Jess, we're still looking at the Excel spreadsheet. There we go.
Perfect. All right, so when I went to the Zillow, what I wanted to show you, just in case you missed it, is that we pulled this up and it came at about 14,000. And so my first thought was, obviously the house has got to be worth a little more than 14,000. It's not 1980 anymore, right? So perhaps this is what the last debt was or something, right? I looked at the tape, they owe 43, so it doesn't necessarily correlate. It sits on 0.3 acres, right? So I would assume it's worth a little more. So my second thing that I did was come down and looked at this, right? To kind of get a grasp of what's happening in the neighborhood. So neighborhood looks like it's anywhere between 160, right? 200,000 and max value on these bad boys. So as is, maybe it's 85 to 100, but just kind of getting a good look on this. Right? Other assets on the same street, 225. So you obviously want to trust but verify, get it some boots on the ground, but we can just assume this one's up in the, let's see, what do they have here? Let's share this tab. Let's go back to the tape. They have it valued as, so as is 71. That makes sense. It might need some work, and we don't know what the square footage. All right, they don't have an estimated value. So we value this somewhere around like 100 and like, what do we see? 160 after repair value, right? So it kind of makes sense if you think about it, right? If you take after repair value and divide it in half, you know, if we think it's gonna be around 160, 140, then that's where 71 comes in, right? And so as it sits, we assume that it needs some work. We don't know how much, but you know, again, it's just gotta kind of make sense to me. So we've got this one. It's probably like this. It needs work, I would say. It says foreclosure sale scheduled for 6/12/25. Sale documents for sure for rating processing. So we always want to check, did this actually go to sale? I assume it didn't because it's still on the tape, but you want to trust but verify. If it didn't, this would be a great opportunity to get this note, right? Now, I don't know how much of a discount we would be able to get it from because, again, all the hard work's done, paperwork, you just going to show up at the sale trying to collect the money, which is what we like. But what I can tell you is that this would be something that I would definitely inquire about and say, hey, how quickly can I close on this? If they've already got a sale, they have a scheduled foreclosure. What usually happens is this foreclosure sale gate got pushed back by something, but the fact that you've already gone there is a great green light for you, right? And so you'd come in here and do the math, because even if you paid $43,000 for this, most of the foreclosure is done, right? And the house is worth between what we can assume, somewhere between 160, maybe even 200, depending on the size of it, and a lot. And so what I would say is you definitely want to do your math, put this in our old trusty budget sheet, because if this thing can come up north of the 200s or even close to the 200s, and you get it for, even if you paid par, you know, 43,000, right? So you guys see what we're doing here? We are looking at this guy. He hasn't paid. The note matures in 2027. Okay, it's non-performing. He hasn't paid since 11 of 2023. So he's pretty far behind, which is why they already moved him for the sale. They've done most of the hard work on this in Colorado. Like I told you, it's pretty easy to get them across the board. They have a foreclosure sale date scheduled. So your strategy really would be is find out what the full payoff is and how much of a spread you can buy it from underneath that. Because if someone buys it at the auction, then that's the quickest way to make profit, right? So if the payoff, just for compensation purposes, the payoff is what's owed plus any late fees. So let's say that's $100,000. You want to negotiate that for, I'll pay, you know, maybe I'll pay 80,000 for it. Maybe I'll pay 70,000 for it, because if someone at the auction comes, I'm going to make them pay me the 100. So I'm going to automatically make that spread and not even have to touch the asset. And so that's one of the benefits of getting involved with this. So that's a pretty nice one. Again, we want to pray that this one had a stalled out foreclosure and they're just still willing to sell it. Usually when they get that far, they don't want to sell it, or they're afraid that they're going to file bankruptcy, or maybe they have, right? And we just don't know the update. All right, let's look at one more since we have a few more minutes. Let me know what questions you have. This one above here, I just want to take a look at it. It's in Maryland. Maryland's interesting. Because it's not, they're very tenant friendly, they're very blue, so it's still possible to get stuff done there, and it's not as difficult as like some of the other states. But I would tell you that you want to make sure that there's licensing and the things that you need to get to be successful there. Nothing extraneous, nothing too costly, but there's a lot of details that you need to know before you invest in Maryland. Okay.
Yeah.
Go ahead. Do you want to say something, Tiffany?
Oh yeah, I was going to say, particularly on Maryland, from what we just found out. Yeah.
Yeah,
I
bring it
saw
up.
that.
They didn't know.
Yeah. What's that?
Go ahead and bring it up. I don't think they know. We have time.
Oh yes. Yeah, we did. We just discovered, as we have 2 notes in Maryland, that based on a recent, I think it was last year's lawsuit, and so now you don't have to have a license to own the note. However, if you want to foreclose, or if you you have to have a license in order to be able to do that, to go through the proceedings. And you don't need to go license. You don't need to take classes or anything. It's just a matter of paying for the license through an attorney. Get that done. It's I believe it's about $1,000 or so to cover all the costs of the licensing, and then you're good to go. Only
Yes,
for
like-
Maryland.
Like $1,200, you can get yourself licensed to do some loss mitigation and foreclosing on people out there. But long story short is you find these notes, right, that are going to tell you kind of where they are. This one, debtors counsel was declined. Offer to settle in full. BK is trustee with no choice but wait on payments from trustee. So this one is more of a BK play. You might want to try this one in Kentucky because again, you know, I don't know what this is, but it looks like they're on their last whim, right? If they get denied bankruptcy, or, you know, there's a lot of different tricks we can do to get the house pulled out of the bankruptcy. And so let's look at that one real quick since we want to get a little good taste of what's on this tape. So again, we all know this house is worth more than $4,000. You have to assume so. It's in Kentucky though. So, but I'm just kidding. We know that it's worth more than 4,000. So you got to do your research. Someone had a question?
Funny.
All right, not that I know of. Okay, so you come in and you look and see, but it might be in the sticks, right? So you really got to do your research on this one. But with that said, this one's on its way out. So you're going to start doing your due diligence and kind of figuring out what risk I have in taking this on. Is it any worth it? You know, if this one, they say it's a modular home, what I can tell you is that we don't want that for sure, modular home in Kentucky. But if you can get this for the right price, he obviously wants to keep his house. He's going into bankruptcy. He says he wants to pay it off in full. And so if he owes $4,000, I mean, this one's really nothing we need to keep on the tape. But for conversation purposes, if you got this note for $1,000, right, $500, which is the only thing I'd really offer on this, then you would just sit patiently. You wouldn't do anything. You would not even harass this guy. You would just wait for him to pay you off, right? It's just saving his money, $4,000. That's how you get into notes for under $500, ladies and gentlemen. All right, let me know what questions you have, because that one, I wasn't expecting that one, but it's great to see it in real time.
That's good.
All right. So this non-performers got a few. Look at these in Florida. If you believe we have a recession coming up, Florida is going to go up and down a lot. It'll be a lot more volatile than you may be able to stomach. But yeah,
What about the California one? I'm curious.
all right, let's check it out. Let me know what you guys, if you want to see anything else while we're here. Let's see, where is that California one? There it is. What if there's more than one? Let's check. Give me a second.
There's your funnel, huh? You put California.
All right, so Mid Pines and Jackson, neither places of which I am familiar, but
I don't know.
as always, anybody know of these places? I think David's in here. David PJ might know of these places. He's always all over California.
That's true. You and Anna.
No, I've not heard of those. Mid Pines and what was the other one? Jackson?
Yeah.
I'll look, but no, I'm not familiar.
Oh, look at us stumping him. That's a first. All right, so let's pull up one of these. Let's look at the one in I guess Jackson that says single family residence detached. And so first thing I always like to do is just check out the asset if you haven't noticed. Let's see. All right. Oh, that's a little cute one. So this
Wow.
looks like it obviously needs some work, but I wonder what type of town it's in. It's got cute, it's got some decent values on it. Huh. Wonder if we can zoom in on this thing. Let's see if we can see. I mean, it looks like it might be a hell of a rehab, but.
Yeah. That's an understatement.
This
You
roof
gotta
is-
you gotta wear a hard hat when you enter.
That roof looks old, but the neighborhood looks very nice is what you really, so when you talk about renovations, you want to find the worst house on the block, well, it looks like we just found that here. I can tell you that. So for those of you who are looking to flip, this is a decent opportunity, right? And so let's go back to what's going on with this. And so that one is grayed out. So it looks like this one is REO. And so we would just have to make an offer on it based upon what we think we can make and flip on it, right? So vacant, HECM, MSJ pending. So this one's pretty free and clear. HECM stands for was a reverse mortgage. And so if we think it's worth 400 and by the size of it, I think it was 2,500 square feet plus landscaping and outside, you know, and whatever. If you think you're gonna have to put in what, $250,000 into this bad boy to fix it, maybe call it 200,000 just to round it off, and you think it's worth 300. I'm sorry, 500 as it says here, sell it as is. And you obviously want to call up a realtor and find out, but assume it's just worth $500,000. You know, you maybe can offer 200,000 for this, but it's got to be cash. Maybe you offer 150 depending on what your math says, but you know, you want to make sense of it. If it's going to cost you, and you get to go buy it because it's vacant and it's REO, so you will get to go and look at this one, right? So you got to go in, spec it up, maybe find out you can need 180,000 on this thing, do your math.
Hey Jess, I think you stopped sharing.
Thank you. Just looking at the spreadsheet on this one. Is that it? Yeah. So this one says that it's REO. And so if we assume it's worth $500,000, you just go in there, do your math and put an offer in. Good news is that this is one of those houses that people drive by all the time and they can't figure out how to get in touch with the seller, right? Because it's on a tape somewhere. Does that make sense? So, all right. Let me know if you have any questions. Otherwise, we've got about 5 or so minutes left here. So I want to get everyone to get out their remedial questions that they have while we're here. Otherwise, you're going to see this in your email by Friday. And you should already have the performing note one. If you don't, let us know. And then Tiffany is at the Profits email for those of us who are members of the community. You can always reach her at profits@noteassistanceprogram.com. Gary, what you got for us? You got a question?
Oh, I was gonna type it in, but I was just gonna. I need to look for the tape for this one, so I'll email Profits.
Yep, she'll get that to you. Thank you very much. Gary's going out there. What's up, EJ? Wait, Gary, where are you
Yeah.
calling from again?
Me,
Yeah.
Oregon,
Tell me again.
Oregon.
Oregon. Okay, that's right. I always think West Coast, but I don't forget where. All right, EJ. Sorry. What's up?
You said we only got 5 minutes, so there's not enough time to break down one more that caught my eye. Oop, can you hear me?
Yeah. But you know how to get touch. You're by yourself, so you know how to get in touch with me if you want to do it together.
Okay,
Tiffany
okay.
will be available too.
Okay.
Yeah. So, but I appreciate that, keeping us active. Yep.
Jess,
Yes. Hey, Anna.
hey, call me after this. I'm in Goleta right
Oh,
now in Santa Barbara.
Well, alma mater, nice.
Wow. She's like, yeah. Who knows? You might be close to some of these. Okay, great. I will
Exactly.
do that.
That's why I was asking if you could call me after, because if it's close, I'm gonna drive by.
Oh yeah.
Exactly. I was thinking to myself, there's got to be somewhere. It sounds like it might be where these are. All right. Who else we got? Anybody
I'll
else?
call you Anna. We'll do a trio.
Yeah. Thank you for
Yeah.
that.
Hey, I see Josh on here. We'll connect with you later. I think you told us last time that this is about the time that you'll be able to do something, so we can connect after and talk offline.
Yeah, sounds good. Thanks.
Okay.
All right. Well, then I appreciate you guys spending some time with us. I'm going to stop the recording.